I'm Owen Bigland. This is the Inside Edge video blog. Okay, bunch of topics here. Well, I want to talk about interest rates, and I'm coming at it from a bunch of different angles here. Try and keep this to about 7 or 8 minutes if I can, I hope. So yeah, a couple weeks ago we got another surprise quarter-point interest rate hike, and a lot of people are asking, oh, is this, and apparently there might be a few more coming, which of course the Fed in the States and Canada are always going to say. Keep in mind, they're always going to give you a hawkish tone because it's, they want to get inflation down to 2%. So they're always going to have a hawkish tone moving forward. Whether we get another quarter point or two later this summer or fall, who knows? But we got another quarter point here. And is that going to freeze up the market? And is, house prices going to start finally coming down after we've had this big 3-month rush here? Probably not. A quarter point I don't think is going to do a whole lot. Depends if we get a few more. You guys know I don't pay a ton of attention to this. I just kind of let things lay and see where it goes. Trying to forecast it or guess where it's going from here is a fool's errand. But what I'll tell you here is, the variable rate, and I've got 2 of them. I have 2 variable rate mortgages. I've got a lot of mortgages. Most of my stuff's on fixed. Is now at 5.69%, 5.7%. You can get a 4 and 5 year fix for less than that, as a lot of people know. I think it's something like 35% of Canadians are on variable rate mortgages. 38% was the exact amount a year ago. Some of those have dropped off, of course, and have locked in. So this doesn't affect the majority of homeowners. They're still on fixed term. I know most of my mortgages are on fixed term. Some end of 2024, but I've got stuff into 2025 and 2026 on my fixed term. So they're immune to this stuff. Where I do see, kind of a ticking time bomb that I don't hear talked about a lot is the revolving line of credit that a lot of people have built into these mortgages. That's where the real killer is. That is now at 7.15% on TD. So this is the variable rate one I have. I don't use a revolving line of credit. I never would. But if I did, and I've got $1 million sitting in that I could tap into on these mortgages with TD here, over $1 million, I could borrow it at 7.15. Well, there are a lot of Canadians that do have tapped into that revolving line, and that is at a much higher rate, 7.15. That would be, I think, where the real worry would be for most homeowners if they've got that revolving line of credit. But let's see where it goes here, guys. It's not so much the quarter point hike, it's what it kind of does, to people's psyche, because they think, well, we paused for 3 months after 8 hikes. Now we're raising again, and is this the beginning of some more hikes, 3 or 4 more? That's what can spook people and put them on the sidelines. Too early to tell yet. I don't think we're going to have a situation like we had last summer because we were in the early stages of the hikes last summer. What happened there is we had a crazy spring last year up until May. Once the interest rate hikes started to go up, by the summer the market died and it never got back. It was a very slow fall and into the winter last year. And it wasn't until we paused in late February that the market took a big rip here. So let's see. I'll give you guys some updates. But here's a fallout. I'll give you guys just a fallout from this. You'll see more of these. I saw this one is a condo development, a 400-unit condo development called Minaru Square Park in Minaru, in Richmond. 400 units just got canceled. And the developer is basically blaming it on the interest rate hikes. All the pre-sale buyers here will all get their deposits back, of course. But there was also a couple of big ones in Ontario that I saw in the news. So these are kind of the fallouts of these higher interest rate hikes. And this is the perils of buying pre-sale. Just give you a little blurb here that I agree with. And of course, these buyers had put these deposits down 1.5 years, 2 years ago. Market's gone up now, and now they're not going to build the project, and you're going to get your refund back, your deposit. But hey, that's not a great consolation prize because prices have gone up 10%. Well, they've been holding your deposit. That's the perils of pre-sale. And this Tom Davidoff from the University of British Columbia, the real estate professor, he came on and had some comments, he thought, yeah, they get canceled and there'll probably be more of these. Developers probably hope that rates would come down faster. They probably tried to ask the city for more density to make it work. He added that pre-sale is a high-risk investment, more so in the current interest rate environment, and construction costs are high. We've seen other pre-sales run into trouble as well, and I don't think this will be the last. Most buyers, according to Davidoff, probably shouldn't be in the ocean with the sharks of pre-sale because it's a more sophisticated investor with a high risk tolerance. For the average buyer looking to buy a home, buy an existing home, in other words, buy tangible product, he said. So yeah, how many times have I been pounding this home to you guys over the years? Pre-sale can make some sense in special circumstance, certain circumstance. I'm not going to go into them. I've done tons of blogs on pre-sale. Go back in my archives and watch all the blogs I've done. And if you answer a question in my blog here, I've done it on pre-sale. Go watch my videos. But they used to make sense 15 years ago. People are newbies to the pre-sale. If they knew what pre-sale was like 15 years ago, it was a dreamland for buyers. You could buy these with 5% down, move in 18 months. You could assign it, flip it, whatever you wanted, no cost. Now it's completely shifted over to the developer. Everything is to the developer now. You have no real rights or recourse when you buy a pre-sale. They can cancel these things all the time. Remember, there was a big one in the news a couple of years ago, a townhouse complex on South Canby. Same type of situation. They put their deposits down. The market took off. The price of that land went through the roof. And the developer kept delaying and kept delaying. And finally it got to the point, why would I want to build this thing? I'm just going to give these guys, come up with an excuse, give you back your deposits, and away you go. I'll reconfigure this thing later on and sell it at a 50% bigger profit. That's what happened in a couple in Ontario recently. So just be careful with these pre-sales. But this, a lot of this is legit. I'm not saying that that's the case here with this Minaru Park. I think a lot of it was interest rates. Interest rates spiked. There's no construction. Can't get anyone to build. And we just can't make the project feasible anymore. But that's what pre-sale does. They can get out of these things. They can cancel these for a myriad of reasons. And in some cases, they hold your deposit for a few years, then cancel it. And of course, your money's been sitting doing nothing for you and the market's gone up 15%. That hurts. You got to start all over again at a much higher price. So we'll see where the interest rates go here. I'll keep you guys posted how it affects the market. We'll find out. I mean, as we move into summer here, we usually get a slowdown for the summer months. It's not so much the quarter point that does it. Sometimes it's just the buyer's perceptions here. They think, well, we just paused for a while. Now this could be the beginning of 3 or 4 more hikes. I'll take a break and stay on the sidelines for now. So far that hasn't materialized, but it's early yet. It's only been 2 weeks since they raised it. I'll give you guys another update as we move on to summer. Thanks for watching. See you next week.